Let's start with explaining why. When bills were set in 2009, price limits were set for each year, but there were a few things that couldn't be quantified at the time. So what the regulator said was, I'm going to make no allowance in prices for the time being, and you can come back when you know exactly what you've had to spend on these items. This would be a one-off adjustment, but we're asking for the regulator to spread it over several years. So this is not, even if the full £29 is allowed, this is for a one year, unless we can persuade the regulator to spread it over several years. And the reason we're doing this is because we've had to spend very significant sums of money, particularly on buying property for the Thames Tideway Tunnel, which is the big new sewer we need to build under London. We need to buy the land for the construction sites when it becomes available, otherwise it just gets more expensive. We've also had to pay the costs of taking on, the government decision was that we should take on 24,000 miles of what had been privately owned sewers. Those are now ours to manage and operate, and of course there are costs involved. And at the same time, because of the economic downturn, the short-term rental population in London, which we find very hard to build because they move so fast, has been moving more quickly. So although we've swallowed up £100 million of bad debt costs within the company, and although dividends are well down by more than half last year, we do need to get this money back, preferably over several years.
Well, the point is, though, that actually in the last few years you've paid out dividends of over £1 billion to your investors. Surely, this will actually raise just a fraction of that. Surely, if you hadn't been quite so generous to shareholders, you could have done this without taxing hard-pressed householders.
Well, dividend bills are set at a level which will allow a well-managed, efficient company to deliver all the services it needs to provide and to provide a dividend to shareholders. 70% of the money that's invested in Thames Water is invested by pension funds, and they need to pay pensions. Our second largest shareholder is the BT pension fund, so any retired BT engineer is getting part of his pension from us. And if we're hitting our targets, as we are, then we should be able to pay a reasonable dividend, and that's what we've been doing. But in the last year, as I say, it was down by more than half from the previous year.